Good morning, this is Jack from Charging the Markets, and this is the pre-market webinar for the morning of Monday, the 21st of April. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right, I posted last week some projections of what I would ideally like to see in terms of coming down a bit today, and possibly into tomorrow morning, coming down a bit further and setting up a nice looking support trend line for what would be the obvious bear flag if we go higher, and then we're going to fail, which I think is probably a reasonable expectation. We've gone a little lower overnight, but it's only a marginal lower low. Not sure that's going to hold, and this could be, of course, a double bottom to take us back up into this high. So watching that carefully. No positive divergence on ES, no positive divergence on NQ, which has done pretty much the same. RTY actually has held up pretty well overnight, and YM has gone down more than the others, possibly because of Boeing, which has not been prospering lately, because of course it's a target for an easy target for people to cancel orders with. So this has gone down lower, and this is the only one where we've got a possible 60-minute buy signal brewing on YM. Looking at DAX and the SDX, relatively unaffected. But I wasn't drawing in potential flag support trend lines on those anyway. All right, let's have a look at the bigger picture charts. Okay, looking at the various wedges I was drawing in here, we don't actually need much more than retest the low on SPX, so I'm hopeful that we'll actually see this trend line tested today or go a little lower and establish an alternate trend line. On the Qs, we need a little lower than we would on ES, relatively speaking, and Dire looks as though it may well reach it this morning. This actually improves our chances of getting a decent bear flags forming on this rally considerably. Then we would need to find support, of course, and then we would need to make a higher high, but it wouldn't need to be an awful lot higher, depending on when we made it. I've drawn it in as though it would take all week to make that high. I'm thinking it might. So we shall see. All right. What are the other resistance levels to be watching when we're getting there? Well, we've obviously got the daily middle bands. I've got SPX currently at 54.43, and I've got the declining resistance trend line currently at about the 55.50 area. Looking at Qs. We've already tested and held the daily middle band 3 times so far. If we are going to get a significant higher high and form these bear flags, that will require some breaks of the daily middle band resistance. And we've got declining resistance slightly above as well. These are both levels that could hold and actually would be tested at similar times. Looking at Dire, don't really have a declining resistance trend line I was watching closely here, although I do have one. So I've got that. I've got that currently in about the 417 area, and I've got the daily middle band currently at 406.84. So those two are not together. All right. No real divergence on any of these, apart from the hourly positive divergence on YM. So this is not, although I would be hoping if we do go higher, then we can set up some sell signals on the futures on the hourlies. On IWM, I haven't drawn in an obvious flag option there because actually we don't need to go any lower to set up a support trend line. We've got a double bottom here, but I have to say this is forming much more like a bear flag than a double bottom. So if we were to see a move up into this double bottom resistance, that would be up in about the 200.5 area. Daily middle band is at 192.92. The declining resistance I'm using here is currently at about 195. Looking at DAX, we've seen obviously a decent looking rally, but we've got an obvious target above at the 21.584 area at daily middle band, which I'll be watching. And Nikkei, we've got daily middle band above in the 34.957 area at the moment. Okay, right. We have, I've been talking about the possibility we might see a decent rally on DX here. This wasn't hugely encouraging overnight. And I would say we're now getting down into some of these support trend lines that I was looking at, and I think this is a hit of that possible bull flag support trend line. Now, I would note that I've been talking about the possibility that we might see a break against the bear flag and see a hard breakdown over the next few months. But of course, I would say it's a bull flag. Normally, 70% of the time, they will break up And obviously it might do that here. We've got a weak 6-minute buy signal that's fixed, barely noticeable divergence. I didn't bother mentioning it on the Euro chart or the GBP USD chart, where we've got similar negative divergence. But I'm still wondering about a possible rally here, although I have to say on the bigger picture, if you look at the bigger picture charts I was looking at on the dailies, there are some very aggressively downward looking patterns on USD JPY and USD CAD, particularly suggesting that the dollar will not go up. We will see which one of those delivers. Okay, ZB, we are heading back down here. This could be a bear flag, and again, we could see a higher high in it. There is a lot of downward pressure on bonds here. But I would note that I've still got an hourly RSI 14 sell signal on TNX, and that hasn't, at the last time I looked, made target yet. Let's just check that quickly. So bear with me a moment. All right. This is the one here, and you can see that hasn't made the target. Normally, I would expect that to make target, so I'm thinking that we may see a move down here. Could this be a head and shoulders for me? Potentially. I'm not really looking for a move that far down, up on bonds and down on bond yields, but potentially it could be. So I'm keeping an eye on that. All right, let's have a look at CL. Now, CL, we've seen a little bit of a pullback overnight. It's not much. We've still got an IHS, which is broken up with the target in the now I've rolled this into June along with NG, and I rolled all the grains and lumber into July over the weekend. And also I added the palladium and platinum charts because I've been unhappy with stock charts having stopped their coverage of that on the daily, so I've added more analysis back in on the hourly chart. Okay, let's have a look at oil. That has pulled back a bit. This might just be a back test of broken resistance or the weak to pivot. I'm still quite liking this upside because I don't think the rally is yet done on equities. Not sure we'll reach it. This might just be, we reached 64 here, which is a back test of broken support. We could see a fail here, keeping an open mind, but definitely open to the possibility we go higher. All right, looking at NG. NG, we're still just about holding the support trend line. I would note that we've got targets significantly below, but we did make a target in the at 3.2 area on the May chart. This is June now, of course. And that did actually make one of our downside targets. So I don't know how strong the pressure is for this to go lower, but it isn't necessarily stronger enough to take it lower. This is an important inflection point. If we can hold this level here, this can still turn back up and possibly deliver on the bull scenario to take it back to 5.75. GC. GC has gone higher, so I've redrawn this rising wedge, and we're testing resistance on that at the moment. No current negative divergence. SI, we're coming back up into the retest of the high. I would love to see this get back to 38. Doesn't mean it's necessarily going to, but I'm liking this higher. Palladium, this is a little head and shoulders here. I'm just drawing it in here. It could be that we're about to see a reversal back down here. And we're slightly breaking down from that, and that would have a target. Have a target in about the 905 area, I think. So hang on, I'll give you an exact number on that. So bear with me. All right, hang on. All right, that would be 986 to 42. All right, got target in about the 907 area. And it's quite a nice looking head and shoulders. It could make target. On platinum, we've got a potential little level top here, and I am wondering again if we might see some reversal. I am thinking I'm going to be writing a couple of posts this week on the bigger picture, and I'm going to be looking at the potential for other stores of value to become more important over the next few months to a year, and two of those are going to be platinum and palladium. But at the moment, these are still industrial metals, and we are likely to be looking at a slowdown, and these have been suffering. I still quite like these to the upside. I think these may back the trend, and I would note that we've got the next obvious target on platinum with this declining resistance trend line in the 1020 area, and I would like to see that hit. On palladium, we're pretty much at resistance already. All right, looking at HG. HG is still continuing to go up. I'm skeptical about this lasting long, but it has lasted so far. So we'll see how that goes. Watching for resistance of the monthly pivot at 4.98, and I'm doubtful about it getting past that. Looking at KC. KC still got an IHS, still broken up. We've still got 3 resistance levels above. Monthly pivot at 383.25. This declining resistance currently in about the 389 area, and the actual IHS target, which is up in about the 397.5 area. So watching those. SB, I was talking about this on the bigger picture yesterday. We do have a really, really nice big downside scenario, which involve it halving from current levels. This makes this a dangerous long. Doesn't mean it's necessarily going to happen, of course, but it does make it a dangerous long. CC, nice looking double bottom here. No sign of that breaking up. Kind of looks like a little bear flag from this last low. On wheat, still looks like a bear flag. Doesn't necessarily have to be, and we've got an okay looking double bottom here, but at the moment it looks like bear flag. Corn, we are seeing a move up here from a break up over from a double bottom. That's got a target at about the 517 area, and I'm thinking it might make that target. We will see. Soy, and this is holding up surprisingly well, given that about half of America's soy tends to get sold to Japan, and the Japanese, to get sold to China, and the Chinese have been replacing that, and probably can entirely replace that, and those orders probably aren't coming back. I'm thinking soy may go down significantly from here, and I think this looks like sell, but we don't have any negative divergence here at the moment. CT, I'm keeping an open mind. This could go either way. Not really been doing much lately. Lumber, decent looking double bottom here, but I'm leaning towards the downside. Again, this is a very economically sensitive one. Live cattle, we've broken up towards the target in the 207 area, and at the moment I'm not seeing any reason to think that won't make that target. And lean hogs, watching this resistance level here up in about the 99.75 area. That could be an IHS neckline, a rather ugly double bottom. Watching that. We've got an RSI 14 sell signal fixed in the short term. All right, let's have a look at the questions. ZL, I'll have a look into that. Which one is ZL? I'm not familiar with that one. Is that one of the bonds? I can have a look into it. But let's have a quick look here now. Wait a second. Soybean oil. All right, yeah, I can have a look at it. I'll work up a chart today and have a look at it tomorrow. That will be interesting. I haven't charted that one before. All right, brilliant. In that case, I think that's a wrap, guys. I'll catch you guys tomorrow morning. Should be an interesting day, hopefully. I'm hoping that indices will go a bit lower and start tagging my support trend lines that I posted last week. If we do, then that's going to be setting up some nice looking bear flags, which is what I would like to see. All right, everyone, take care. See you tomorrow.